banks and mortgage brokers are telling you they have the best rates. Well, they can't all be right, obviously, but I'd like to give you some tips about how to play the rate shopping game the smartest way. First, you should be prepared before you start shopping. Know your credit score, loan amount, and the type of loan you're after. Each one of these factors will have a significant effect on the cost of your loan. When you're asking a lender for his rate, you have to be very specific. Asking, "What's your rate?" has so many variables that a single answer would be meaningless. Here are the main factors affecting rates and how to nail them down. Loan program. You should specify that you want, for example, a conventional loan of $320,000 with a 30-year term and a fixed rate. There are lenders today advertising rates that are unusually low, but when you learn they're advertising a 10-year loan, lower rate but much higher payment, you might consider that there's a catch to their deal. Also, if you're buying a condo, your interest rate may be about 0.25% higher than for a single-family home. Loan amount. If your loan amount is greater than $417,000, your rate will be about 0.25% higher. Also, if you're planning to put less than 20% down, you will likely have to pay mortgage insurance. That will increase your effective rate. Points. If you decide to pay discount points, and 1 point is 1% of the loan amount, you'll have a lower rate. As a rule, paying 1 point will decrease your interest rate by about 0.25%, but this may change a little bit from time to time. Credit score. Lenders are a lot stricter these days. If you have a credit score of, say, 650, there will be an adjustment to the rate. That means a rate roughly 0.75% higher than for someone with a score of 740 or better and a down payment of 20% or less. So let's put this all together. You're planning to buy a home for $400,000. You want a loan of $320,000, 80% of the price. You plan to have that loan for several years, so you're willing to pay points to get a lower interest rate. You know your credit score is 760, so when you call lenders asking for their price, you'd say, "I want a loan of $320,000 for a purchase of $400,000. My credit score is over 740. I'm willing to pay 1 point. What is the best rate you can give me for a 30-year fixed rate loan? What are your processing and underwriting fees?" By asking your question in this way, you're eliminating all the wiggle room, so you have the best chance of getting an accurate and meaningful quote. You should ask for an itemized breakdown of these costs in writing. Keep in mind also that mortgage rates change constantly. You should do your rate shopping over as short a period of time as possible. A rate quoted 2 weeks ago could be very different from rates available today. I'd like to mention one more very important part of shopping for your loan, and that's the loan officer. In today's increasingly complicated and changing world of finance, you need to know that the person working for you has the experience and the resources to get your loan funded on time. You should not be shy about asking any loan originator specific questions about their experience and background, and that includes any of us here at PFS Funding. I hope this was useful. We are never too busy to answer your questions. You can always call, tweet, or text us. All our information is right here, and if you'd like to start an application now, just click on the application link. Bye for now.